what's going on with Google, especially
That's
over
very
the
cool.
last couple of trading days. They went from $207 a share down to 187. Not fun. I'm a big Google stockholder, and it is not fun to see this really valuable business get sold off, but it's rational. It's sold off 10%. 10% on a $2.5 trillion market cap company ended up being $250 billion leaving the Alphabet stock. And that money is going somewhere else. Will it come back soon? I don't know. But I can tell you that it's rational. Google announced that, hey, we're going to spend all kinds of capital, more capital in building out a data center for AI. Meanwhile, investors a month ago heard about DeepSeek. And FYI, DeepSeek was put in the hands of experts in the Silicon Valley. The expert opinions was DeepSeek did a great job. Their innovation's real. It's real. We can emotionally say, oh, I don't like it because it disrupts, the future of Google, and I love Google. That's one way to go with it, but I need to be rational and clear-minded. The experts are saying DeepSeek's real. It changes the AI space. Now, is it also rational from how technology innovates and advances? Yes, over time, technology becomes less expensive and better. That's reality. You look at hardware like computers, networking, internet service. I'm on fiber at home, and my fiber is super fast. I think I have like 500 or 1 gig speed. I think it's 1 gig speed. And I pay $40 or $50 a month. Okay. My internet service 10 years ago was 10% as fast as it is now. And I paid $80. 20 years ago, I can't even compare it. It was maybe less than that. It would be like 2% as fast as it is today at my home. And I paid $100. So in the last 20 years, my costs has went severely down, and the performance of that technology went up through the roof. Okay. And that is going to happen in technology spaces. So when we talk about just, with Google Alphabet, Google has developed Gemini, and the way they develop their large language model is that it's a private large language model, and I'm not using the right word. It is proprietary. That's the right word. It's a proprietary large language model. What Google wants to do is control it like they control the algorithms around their search. It's really important to them. Totally get it. YouTube, really, really successful. So they like to control things and then have a really large business. And that may prove to be good for them, especially as they try to control search, because I think they're probably most importantly trying to protect the search business because that's so profitable. But will they be the solution provider in other ways? Like, will the media industry say, hey, we want to use Gemini from Google Alphabet because it provides the most value to us? That's probably going to be tough because Meta provides Llama for free. OpenAI has a lot of credibility. And now you have DeepSeek, right? So if you're Disney and you're like, we're going to have AI. Okay, cool. Well, in the US, I imagine you're going to use a US-based large language model. Perfect. But when you go Disney to Asia, I would think you're going to use DeepSeek or Alibaba AI. If anything, those governments will require you to do that because they'll be like, hey, if you're going to do a large language model in China, the data is going to stay in China. Okay. So they're going to use DeepSeek or Alibaba AI. So I think Google is having a moment where investors are weighing what's going to happen. It's like, wait, Google Alphabet doesn't have a full monopoly on AI. No, it's very competitive. And secondly, they're spending a lot more capital in that data center, which may be dollars that are lost and never recovered. Because if AI becomes much less expensive and Google is spending too much and their product is too expensive, man, that's going to be a big loss. And I'm a Google stockholder, okay? I think the company's terrific. But those sentiments or those thoughts and observations are real. That's what stockholders are looking at. Microsoft sold off for similar reasons. They spent a lot of money in that data center. And the market said, we do not like that, Microsoft. And I'm looking at the monthly because Microsoft announced earlier. And then Amazon just came out with their announcement. And the market so far is saying, we don't like it. We don't like it, Amazon. We're selling you off. So the three amigos, who are the biggest cloud infrastructure companies on earth, are selling off because the market's saying you're spending too much money on that data center. So I think what I read into your question, or the reason why you asked about Google, Tomas, is it a good time to buy? No, for me. I need to understand, what's the market going to do? Is the market going to get really sour, dislike the three amigos here? Is it going to say, guys, we don't know what's going to happen, but the reality is you're spending way too much on CapEx, okay? So I'm waiting. I sold all my Microsoft stock. It wasn't a lot, 15,000. I sold it at a loss. Year to date, I guess over the month, let me go year to date, so that way I clean year to date. Google's down, and they were up for a while. Microsoft down. Amazon is still up, but that's because they just announced their earnings. And the market may really dislike that they increased their capital expense by $30 billion per year. That's a lot of billions, man. So let's look at Google and look at their financials. Let me try to point out a few things. And I'm going to point it out on the statement of cash flow. So what is incredibly valuable about Google is they're really profitable, represented on this top line, excuse me. So that's very impressive. And then that cash, the profitability ends up on the line we call cash from operations. That looks super. Look at that graph. Isn't that beautiful graph? It's like you're going up a beautiful mountain. That's great. Now, the problem is, see, this is CapEx. To get to free cash flow, you take cash from operations minus capital expense. And when you look at the most recent capital expense number, you see how it's sticking out here? This is bad. And I can't hover over it, but you see that $52 billion over the previous 4 quarters is substantially more than previously. That's capital that's going into the data center, into the business. If tomorrow they had to scrap the data center, they would have to write off $52 billion. So that's what the market is having a problem with. Now, if they come in a quarter, 3 months from now, and say, we spent just as much money, even more, and we're going to spend a lot more, it's going to be a little bit like, remember when Meta in 2021, toward the end and toward the beginning of 2022, they were spending in the metaverse, and they were spending like this, just kind of crazy spend. And they were saying, oh, the metaverse is going to be awesome. It's going to be great. But they couldn't show revenues for metaverse. Right now, Google cannot show, Microsoft cannot show, Amazon cannot show AI related, like this is new AI revenue. Okay. They're not showing that. So in a quarter, if they come back with an earnings that follows this, it's going to sell off. And between now and then, it may sell off a little bit. It may gain a little bit, but I need to see another earnings announcement on Google Alphabet. I sold a few shares of Google Alphabet this past week. I don't think the company's in trouble, like, oh no, their business isn't very good. No, their business is very good. It could be repairable too. But when we look at like Meta is a good example of how the market disciplines a company. Meta was very excited about the metaverse. And in September of 2021, the market said, no, we don't care that the rest of your businesses are great. Like Meta's Facebook business, Instagram, they just drive so much cash flow that it's sold off the stock. It sold it off by 76%. And this is Meta. This is everybody knows what Meta does. They're the leader. Nobody ever questioned that. They were just questioning, if you're going to burn money in the form of CapEx on the metaverse, we don't find your stock is desirable. You're wasting money. It's like, to use an analogy, it's a person that makes a lot of money. They have a career and they're really successful. Let's think of a footballer. The footballer makes $1 million a year. And wow, man, they're doing great. The only problem is they spend $2 million a year on Ferraris and really nice home. Well, that isn't going to end well, because I don't care that you're making $1 million. You're spending $2 million. You're going to go broke. So that's how the market said, Meta, if you keep investing in the metaverse and don't show top line revenue, you're going to go broke, or you're going to change the valuation of your company to the negative. So they sold off the stock. Meta got the picture. They got the news. They changed their business, and they said, no, we're not going to spend that much more on the metaverse. And these guys have flourished ever since then. So that's my observation of Google Alphabet. Go for it, Tomas.
So did you sell Google to buy again if the stock price goes lower?
So I'm in cash, a little bit more cash. So that's where the capital went. And the way I would answer that is, I think that Google Alphabet can go lower stock price over the next 4 months. I think my expectation is that it's going to go lower over the next 4 months. It's not going to go higher. Now, how low? I don't know. How hard will the market be on Google? I don't know. I showed you an example of Meta. The market was really hard on Meta, like, boom, you're going to go down. Will that happen to Google Alphabet? Maybe go down another 25%. That would be a lot of capital. These guys are $2.28 trillion in market cap. So that's my expectation, Tomas. Now, is there a chance it could rally? I don't think there's a big chance. I mean, what's the story that's going to cause Google Alphabet to rally? There's nothing new. It's like AI. Okay. Now, the one thing that I would say is could change the story is Google comes out with an amazing AI experience. Like, whoa, Google came out with this AI app. It's the number one downloaded app on the iStore. Everybody's crazy about this app, and it's taken over. Okay, that story could cause the stock price to fly, but that they already have Gemini out there. They already have Gemini on, especially Samsung devices, Android devices. So that story is already known. The story around the robotaxi Waymo business is already known. So Google Alphabet is a very good stock to watch in 2025. But for me, I am holding Google Alphabet. And for my next dollar next $1,000 that I invest in the stock market, I'm not buying Google shares. I'm buying other things. Okay. Because I need to wait and see another earnings release. And I need to wait and see how's this AI story going to evolve. It's going to evolve in 2025 very quickly. And it's going to evolve over the next 5 years. And here's an opportunity too, Tomas, because I want you to wake up 20 years from now and go, I'm wealthy and I learned how to become wealthy, and I'm going to be even more wealthy, okay, in the future. If you invest right in the AI paradigm, the AI era, you're going to make a lot of money, but you have to invest in the right companies at the right times. Google Alphabet is definitely an AI company, but right now is a risky time in the stock, is what I would say. There are other stocks that are playing in AI that could be really, really valuable. We need to study the smaller companies that are going to start taking on kind of like the next generation of experiences on AI. The internet, the way we use the internet today, right? Like I'm using Google Finance on a browser, and it's awesome. It's great. Mankind has been served well by the internet. Well, Chrome is the leading browser. They were not the first browser. The first browser was Netscape, and that business was disrupted by Microsoft. And then Microsoft was disrupted by Google. So the third mover won, or is winning as of 2025. When we look at other experiences, like Google Search was not the first Google search engine. There was like 100 before it, but Google did it better than all of them and disrupted all of them. That's well noted. Last, Facebook was not the first social media app. MySpace was. MySpace was the leader. They were clearly the leader. And then Facebook took over market share from MySpace. So the first movers on AI are not necessarily going to be the winners. It seldom ever ends up being that way. So that's another thing about AI is we don't know if there's a small company out there that's going to come out with AI that just breaks all the rules and is incredibly better, incredibly cheaper and just breaks everybody. It breaks AI, OpenAI. It breaks Gemini. It breaks Meta AI. That, I would say that could happen in 25 and 26. DeepSeek just gave us a little taste of that. Like somebody came out and really created a lot of noise. Is that the last noisemaker that's going to come out? No, there's going to be a lot of them. Scott, go for it.
Man, you know what I was thinking the other day? Do you remember the early days where you have all the competition to Google that may or may not exist, like Lycos?
Yeah.
Lycos. Actually,
Ask
I just found out.
Jeeves.
Well, it became ask.com. Then I think I don't know what happened to Ask, but I just found out, Lycos is actually still around. Someone bought it and kept it alive.
I use Lycos.
Crazy? Yeah,
And,
I'm not that much younger than you. So both of us were there for the early
Here
days.
it is. There's the dog. Cool.
Yeah.
So this was like, Tomas, just a history lesson. This was the leader before Google search. One of the leaders, excuse me.
Yahoo and these guys.
Yahoo was out there and they were disrupted by
This
Google.
one still working.
I think someone revived it. I think it's one of those things where someone revived the brand for nostalgia or whatever.
Yeah. So
but anyway.
So the investing plan for Google Alphabet, for me, I'm waiting. I don't mind having Google in my portfolio. If they have a downturn and the stock sells off by 25%, that's good news. I'm going to buy more. If the stock maintains its value, okay, that's fine. If it rallies, well, that's good news. My investment's worth more. But they have to answer these big questions, which is, if you're going to invest that much capital, you better start showing some real use cases that consumers are excited about. You don't have use cases that the consumers are excited about, and businesses are excited about. Stop spending so much capital. If you keep spending capital, we're going to punish you. We're going to take this stock down to $100 a share. And if Google ever gets close to $100 a share, I'm going to be trying not to scream too loud, buy, because I will be buying Google shares like crazy because their business is super valuable and the market will overreact at times. And that would be an overreaction. So back to you, Tomas. I'm trying to give you my best thoughts and ideas around Google Alphabet, and please ask any and all questions you have.
I have only one. Maybe it doesn't make sense, but why Meta wasn't affected by this?
Okay, very good question. So why is Meta different? Okay, so these three amigos, Google Alphabet has, are you familiar with the term cloud infrastructure?
Yeah.
Public cloud. Okay. So in businesses, like when you're on a Zoom call, right? That's running on a cloud infrastructure that's provided by another company. These three guys are cloud infrastructure companies. Where Meta is different. Meta is a pure consumer application. Facebook, Instagram, WhatsApp. I think I got the bigs. Now, what the market's deeming is, hey, it doesn't matter what AI ends up being, whether it costs, $100 per user to maintain it a month or 10 cents a user to maintain it a month, to provide AI experiences to that user. Meta's going to win because they have I think the biggest user base on earth. Probably Google would argue that, well, Google search can't be in the same category. Meta has monthly active users around 4 billion with a B. That's 4,000 million. That's huge. So whatever AI becomes, Meta can serve it to its population of users. And that is exciting for Meta because that means they're going to be able to have new experiences on Facebook, Instagram, and WhatsApp, which means they're going to have even more loyal users. And I mean, it just means a lot of opportunity. It means it could sell its data to, all these consumer packaged goods companies. It could sell its data to all the financial services companies where it says, hey, everybody's doing searches on how to manage your taxes for your 401k. Maybe you should start advertising, hey, I'm with Charles Schwab. I could help you manage your taxes as it relates to your 401k. Charles Schwab would probably pay Meta a lot of money for that type of advertising. So there's a lot of situations that are positive to Meta. Okay. Meta's part of it is luck. Part of it is genius. They're in the right place at the right time. And they're going to receive a lot of the benefit. And they're not risking a whole lot. It's not like now Do they have like Meta AI is a real application? I like it. I've used it. I've tested it against the other apps. It's only my test. I'm not a scientist as it relates to AI, but I can tell you, I ask questions of Meta AI, Gemini, ChatGPT, DeepSeek now. Meta's as good as the others, especially around certain topics. It's better, and it just has a very good experience. Nobody knows UI better than Meta. They're very good. You see this UI? It has kind of a cool UI. You look at DeepSeek, it has a very Google search looking AI experience, which I'm like, why'd they go in that direction? I don't know. If you go to Gemini, it's search with some more functionality. And if you look at ChatGPT, it's Google search with more functionality. But Meta's like, no, I'm going in a different direction. It's going to be picture, kind of a different experience. And you could say it still has, similar elements. But Meta's really, the market's looking at Meta and saying Meta's going to have opportunities in the future. They're, who could beat Meta in social apps? No one. No one that I know of today. And if AI gets distributed to people, who has the best situation to distribute AI to massive populations? Meta. So the big picture, that's why Meta is going up and these guys are going down, is Meta has the best position.
All right, I get it now. I understand the difference.
Yeah. This is going to be like super interesting for me to follow. So we can cover this every month, every quarter, because we can make money if we follow this and invest correctly. We could also avoid losing money if we follow this closely and invest accordingly.